Welcome back on the podcast, Derren. All your figures and analysis for April have just been published on the CAP HPI website. But can you start by taking us through the headline average 3-year values for April, which is the second month-on-month rise? And just to remind listeners, March was up marginally by 0.1%, but April was actually up by a whopping 2%, which is the highest monthly increase since 2009. What's your take on what's driven this increase?
Yeah, hi Curtis. It's 2% up, which basically has mainly happened over the last 10 days to 2 weeks. The month started quite slowly. It was quite stable. We obviously had the sort of the watershed of the 12th of April where car showrooms reopened. But yeah, the headline figure is a 2% increase at 3 years, which is equivalent to about £275, which doesn't sound a lot, but on some vehicles have gone up dramatically. Some not by so much, and I've never known it as strong as this over such a short period of time. And yeah, it is the largest upward movement over a monthly period since April 2009, which was obviously a recovery from the recession, the credit crunch. So, and it's stronger than last June, which is quite remarkable, really, considering at that point car showrooms hadn't been open for 2 months at all, whereas this time around business levels have been a lot higher due to online activity. So it's a real an amazing period in CAP Live over the last 2 weeks, particularly.
Yeah, and what do you actually attribute it to? Because as you say, it's the biggest jump in over 10 years.
Yeah, well, I think it's the car showrooms reopening. I think there's other factors in play, really, that there are people with money in their pocket, people that are looking to go out and make a big ticket purchase. It's fairly well documented about sort of lack of holidays and socialising, things like that. So I think there's been pent up demand, which is from people not being able to buy or not wanting to buy online, and not being able to visit a showroom, not being able to test drive a car. So consumers, we heard that consumers were queuing out the doors of certain establishments on reopening on the 12th of April. There's been others that throughout the sort of the first weeks showrooms have been too busy, so they've had queues out the door again to maintain social distancing, and because of that, there have been the retailers going out and replenishing their stocks, and going out and bidding for vehicles at the auctions and directly from remarketers, and certainly remarketers have put their prices up, and why wouldn't they, based off the sort of the supply demand situation. So it's certainly heavy demand out there, and we've seen volumes of wholesale data going way above where they've been over the last few weeks. So I think the main reason is lockdown ending, and car showrooms opening, but also the fact that people have got money in their pocket.
And I mean, yeah, I agree with all of that. I think you say, Derren, that supply and demand, you might call it an imbalance at the minute, might you, in terms of that sort of what's happening out there. And I suppose in terms of a follow-up to that, do you think the retail market is following it? Do you think that the retail market is on the same trajectory, or do you think it is purely in the trade at the minute?
I think retail is buoyant, but prices aren't going up as quickly in retail. It's harder to push those prices up. There's always a time lag between trade and retail, and trade prices going up, though, it is very likely that retail will follow, because they are you need to maintain margins. So we have seen retail prices going up, retail advertised prices going up, but not to the same degree as some of those trade prices at the moment. But the signs are very good for the next few weeks as well, and we would certainly expect to see retail prices going up by more than they have done so far.
Yeah, you'd expect them to try and maintain a margin, wouldn't you? Because you say they can't sustain a tight retail price with the prices at wholesale at the minute.
No, the prices in the wholesale world are going up as well because of supply. Obviously, March wasn't such a buoyant month for new cars. as it normally is. So there's not so many part exchanges out in the market, and they're trying to sort of catch up. So we've had a lot of retailers asking us where prices are going and whether we think they're going to drop, because at the moment there are some prices that are a little bit spicy for them to be buying at. So interesting times.
And I mean, you mentioned earlier about the 3-year 60, the £275 2% up, but I mean, and you mentioned that there were some significant movers within that, and for the last couple of months, you've been highlighting that convertibles have been performing particularly strongly as buyer budgets in lockdown have focused on toys and treats, as I think you described last time you were on the show, and you've seen further growth in this month.
Convertibles have, excuse the pun, gone through the roof. They have been strong for quite a while. Obviously, the sun's been shining recently as well, and people have been out there buying an aspirational purchase. They've actually gone up by 5% in the month, almost 5% on average, convertibles. Those 25% figures, that's over the sort of the course of a year. That we've highlighted a couple in the editorial this month. BMW 6 Series convertible diesel, interestingly, and the Mercedes-Benz S-Class Cabriolet petrol have gone up by 25%, which on the Mercedes is almost £10,000 for a 3-year-old car with 30,000 miles. So that's comparing a 3-year 30,000 mile car now with a 3-year 30,000 mile car a year ago, and it's gone up by £10,000. That's an unbelievable increase, because convertibles didn't particularly go down over that winter period this much. They went down slightly, but not by as much as normal. So sort of the seasonal nature of them, it's picked up this time. But the consumer doesn't necessarily know that what those cars were worth a year ago. They just know what they've got in their pocket, what they're prepared to spend, and how much they've got to spend if they want to buy one of those.
And you make a nice distinction in the editorial about required versus desired, and I guess that will apply to some of these convertible purchases, won't it, Derren?
Yeah, well, the people that we hear, according to sort of Bank of England and things like that, that have got that have been the accidental savers, has tended to be people with higher incomes or retirees, that type of thing. Whereas the younger element are probably more hard hit because of their maybe got jobs in hospitality and leisure and things like that. So it is those sort of more well-off people that have been making those aspirational purchases and maybe going out and buying these sorts of vehicles. But then you've obviously got the trade that are going out and either replacing sold vehicles or buying for stock because they're expecting a fairly buoyant time over the next few weeks.
Yeah, and you've talked about convertibles, and what other sectors, vehicle sectors, have performed strongly, and which have underperformed this month?
Well, fairly unusually, I guess it's across the board. It's pretty much everything has gone up. Certainly at the 3-year point, every sector has gone up. We've seen SUVs increasing by more than that 2% average. They've gone up by 2.4%, which is it's not unusual, I guess, for those sort of aspirational vehicles, again, especially at the top end, those SUVs, but that's equivalent to over £300. We've seen lower medium and upper medium cars, which is your C and D sector cars, them going up by more than the average. MPVs, which have been coming down for quite a while, but with car supermarkets reopening and the ability to just sort of turn up and browse around, you turn up and you see that these vehicles look good value, they do a good job for you. If you're thinking of a staycation this year or staying in the UK and using one of those vehicles, then they're reasonably priced now. So it's pretty much been across the board. We've seen increases everywhere. The only slight change to sort of the norm is that older vehicles haven't performed quite so well. Last June, after lockdown 1, those vehicles were going up in value quite dramatically, but I think people that were buying to avoid public transport probably bought now, so those values haven't gone up by quite as much. But anything sort of 5 years and younger, and certainly the late plate vehicles as well, they've been going up in value as well. So it has been pretty much across the board, with the possible exception of electric vehicles, which haven't gone up by as much as others, but they are, as we've sort of documented before, already quite expensive.
And just before we move on to talk about fuel, and it's always an interesting subject, what the sector on SUVs. And you and I, over the years, have discussed SUVs, many times, because you've got such a diverse sector, haven't you, in terms of that SUV, from your two-wheel drive crossover to your fully, four-wheel drive proper off-roader SUV kind of thing. But what is there anything you can share that's happening within that sector, or is it basically strong throughout the whole sort of SUV sector?
What we've seen over the last few, it's a big sector, as you say, Phil. But what we've seen over the last few months is that the larger aspirational ones have been going up in value more than the mainstream, sort of your mockers and that type of thing. But what we've seen over the last couple of weeks is that they're all going up. Even the more mainstream volume models have been going up in value as well. So when I say all, obviously not all models are going up by the same amounts, but in general, the general theme is that even those mainstream volume models are going up in value as well. So it is across the board. I think if you can go out and purchase a mainstream SUV that's in good condition, you can get on your forecourt quickly, that they're going to sell. So there is a little bit of a bun fight for good quality cars that you can stick on your forecourt and move on fairly quickly.
Yeah, because I think last time you were on, we were talking about that top end premium SUV where the online click and collect was benefit, that area of the sector was benefiting from that, but the mainstream not so much. Whereas now, as you say, that physical showroom return and everybody, as you say, with that supermarkets where people can go on and have a look, it seems to be straight across the board.
That's a big change, really, the fact that you can now go and walk around a forecourt. And you think what a car supermarket's like. There's a lot of cars there that you can go and browse around, and you can't always tell if you're not in the industry what they look like by looking at an online picture. So once you can go around and browse around these forecourts, then that's definitely increased. And we've spoken to a number of car supermarkets who are having a very, very good time of it. They're probably ones that have increased by the most in sort of percentage terms with their sales volumes, because they weren't doing quite so well during the lockdown period because of that inability to go and wander around and have a browse and a test drive.
And returning to the fuel topic, and EVs are always a hot topic. And once again, as you mentioned, it's not so strong this month, and you've seen a drop in EV values for I think is the 10th downward movement now in a row, and we're seeing a correction of what have been sort of over high values, it may state. But are we starting to see a tipping point now for dealers to source more EVs because they're more affordable and more viable for the market?
I'm not sure that they are more affordable at the moment. I think they've still got a little bit of realignment to come, really. There's obviously a market for them. I think supply outweighs demand at the moment for EVs. It is very different by model. There's lots of differences within that, but I think they've still got a little way to come, and they still seem expensive. There are obviously cheaper models that have come through, and we've talked about sort of MG and things like that in the past that are much more reasonably priced, but there's still a little bit of a reluctance, I would say, for the used buyer to purchase an EV. You've still got issues around range anxiety. You've still got charging times and things like that. You have to plan if you're going to buy an EV. And I still think for a lot of them, there's still maybe a second vehicle for around town. And I think there is still going to be probably more pressure on EVs over the coming months in the used market than there are for petrol and diesel vehicles. There's more incentives for company car users and for the new car buyer than there are for the used car buyer. So I still think there's going to be a little bit of pressure there. But as always with every sector, the devil's in the detail, really. And we saw some EVs that were doing quite well last month. Kia Soul, Tesla Model X were doing all right, whereas Corsa Electric and Smart 4.2 were two examples that came down by more than the average. So it's very much sort of supply and demand driven.
And when we get you on the show, Derren, we always ask you to gaze into the future. So I'm wondering what's next for May, especially as dealerships are open across the UK, but we've got 2 bank holidays, we've got a half term. will we see some form of return to seasonality in May, do you think?
I don't think so, personally. I
No.
think normally,
We've probably just let people know that there's some bank holidays coming up because they probably don't even know these days, do they? It's just
no,
another day.
It's off the radar.
Don't look forward to them as much as you used to, do you?
No.
Although it's still nice to have a bit of time off. But yeah, looking at what usually happens in May, values usually drop. There's usually plenty of volume out there, still sort of hangovers from new car activity in March and April, and you get, as you said, bank holidays, a half term, people looking at other things, the weather improving, and people maybe turning to leisure activities. But this time, I think the semiconductor issue on new cars is there. It's been talked about for a while. It seems to be getting worse. It seems to be more in the public eye, and we hear of plants that are closing. So new car supply could be an issue, which will mean that you could have used car being more popular for the consumers. Plus, you've got less part exchanges coming in from new car activity. We think that values are going to be strong for a while yet. They may not go up as quickly as they have done over the last couple of weeks, but I think they're going to stay strong for a while. And I'd be saying that if you can buy cars, I'd be buying them, potentially buying them now, because I don't think they're going to get any cheaper. And that is one of the questions we get asked at the moment: is our values going to come down over the next few weeks and months? And at the moment, there's no sign of that. And I think we're going to be strong for a while yet. I would say for May and into June, I would expect values to be riding high.
And just picking up on that semiconductor point, it is a major issue, isn't it? Especially amongst fleets who will not be replacing end of contract cars if they can't source new alternatives, and that will feed into the used market. So how big an issue do you see that becoming over the following weeks and months?
I think it's brand specific. I think there are some that are better set up to cope with it, and others that aren't. But we've seen some lead times on vehicles that are going into next year. So unless you've prepared to buy sort of something that's in stock, if you're looking at a factory order, then you've got to be prepared to wait. So I do think it's a big issue. We do hear of other parts delays as well because of I guess the infrastructure isn't sort of set up, and there's talk of shortage of rubber and engine oil and all these rumours we sort of hear. So I do think it is quite a big issue in the new car market. And yeah, as you say, there are company cars that are just being extended month by month. And speaking to leasing companies, they can't really give us when those cars are going to come back at the moment. So it could well drag on. But I think it's sort of watch this space with it a little bit. We'll see how it pans out. But in the meantime, any issues in the new car market are always good for the used car market.
Yeah, I suppose if that supply can come through, I think, as you say, I mean, recently I think that the CEO of Ford has announced that the impact on the new car market could be more severe than COVID, and this semiconductor issue could continue into sort of 2022. And when you hear horror stories of a Ford Connect van that is on a 12-month lead time, it's an interesting one that's starting to present itself more and more recently.
Yeah, definitely. And as I say, it's going to be interesting over the next few months on how that pans out. But I think that was something that we didn't think would be as much of an issue as it is. Obviously, with the supply, when you put that into the equation, it does mean that used car values could be quite strong. And when franchise dealers can't sell the new cars, obviously they've got to be more active in the used car market. So there could be some fighting for stock, I think, from the remarketing sources.
Yeah, no, I couldn't agree more. I mean, as always, Derren, it's great to have you on, and I think in terms of what's going on, and trying to do that crystal ball gazing is ever more difficult, isn't it? I think now we're talking. I mean, as you've just said there, people asking you what's happening over the next few weeks. Years ago it was what's happening for the next 2 or 3 months. Now it's kind of talking this month, these weeks. It's kind of short-term forecasting now, isn't it? More than ever.
Yeah, it's should we buy now or are they going to drop in price? Because at the moment, there's a bit of a reluctance to pay high prices, but people are buying them, and I think it's if you want stock, that as I say, I don't think they're going to be falling anytime soon. With the monthly values that we've talked about, I think they're almost out of date straight away, and you've got to be looking at live values now, because already we're seeing I've seen some values going up since we cut off, and we haven't even started the new month yet. So.
Yeah, and I remember speaking, before the month was kind of over, anywhere near the end of the month, and it was at sort of 0.7%, and then all of a sudden it's finished at 2% up, and as you say, it's still rising, and that's over a couple of weeks. So like you say, monthly now is more difficult than ever to manage it that way, the speed in which that market's moving.
Yeah, you need to be reflecting. But we reflect what cars selling for yesterday when we're looking at it today. So that's the way forward, definitely. And it has been for a while, to be fair. But in times like this, it's even more important.
And we can't let you go without giving us an update on your 50-mile charity run, and what's going on and how's it going at the minute, Derren. I know we've spoke before we started to record today, but we talked about it, promoted it, talked about it on the last podcast that you were on. How's it all going? How's the charity going?
Thanks for your support on that, Phil and Curtis. Yeah, it's going okay. I had a bit of an injury, but I'm running 50 miles in April for Prostate Cancer UK, which is a charity very close to my heart. I've had a couple of people from CAP HPI who have matched me on the miles and have set up Just Giving pages as well, and we've raised over $5,500 now. So that's the main thing, as well as spreading loads of awareness for prostate cancer and for men to get checked. Basically, 1 in 8 men will potentially get it in their lifetime. So the miles have been. I had a bit of an injury, but the miles have been done now. So I've achieved the 50 miles. So I'm planning on doing a few more before the end of the month. And so have my colleagues as well. And my wife supports me by it. She's walked about 150 miles this month. So it's gone. Yeah, she's still. Hopefully she'll come home at some point. She's still...
Do you get to see her much? She's out walking all the time, by the sounds of it.
So yeah, it's gone really well. Thanks for asking, and thanks for the support. So yeah, if anybody does want to sponsor me, then I've got a Just Giving page, and they can find me on LinkedIn as well.
Is that the best way to get that? Is that to go onto LinkedIn and find your profile on LinkedIn, and it'll be on there, will it?
Yeah, it's on there. Yeah, I'm making a fair bit of noise about it on there, trying to drum up support. So yeah.
Is there a competition between you and the other two? Who's raising the most? Who's ahead?
Well, I've raised the most, but James has run the most. So
okay.
He's obviously a bit fitter.
Well, this is what I was going to ask, Derren, because I'm really impressed that you haven't hung up your running shoes yet. So you've done your 50 miles. You've still got a few more days to the end of the month. What's your target?
I'm gonna get to sort of 55, 56 miles. That's the target I'm aiming for.
That's good going.
It is. No, congratulations. And as I say, anybody listening today, if you've not donated, head over to Derren's profile on LinkedIn, and just anything you want to donate, I'm sure it would be appreciated. And 55 miles and fantastic effort, especially with an injury as well partway through, Derren. So well done with that one.
Yeah, thanks very much.
So many thanks again for coming on to the podcast again, Derren, and giving us that regular monthly lowdown on what's happening in the used car market. And as mentioned, listeners can head over to the CAP HPI website to read the full editorial for this month from the. I think you can find it at cap-hpi.com/editorials, and along there there'll be other editorials from other parts of the sector from CAP HPI. So just leaves me to say many thanks, Derren, and look forward to you coming on next month and talking about what happened in May and listening to some of your visions for the future for the June market.
Yeah, thanks, Phil. Thanks.